The Morgan Report with David Morgan.
David Morgan, themorganreport.com, week ending July 8th, 2022. Well, just a reminder, everybody, if you want to stay in direct contact, best thing is to get on our email list. Still the surest, safest way. If you want to bypass that, the next best place to go is just to hit the blog tab. And our blogs are here, and we've got them archived for a very long time. You can see one in 156. That's a lot of pages when you consider how many are just on this page alone. The Onex Savings Program, that's for silver stackers. It's really not for big purchases. LODE, as you know, is, or most of you will know, is a cryptocurrency backed by gold and silver. And this is leasing gold with someone I know and trust, Monetary Metals, Keith Weiner. And that's for big accounts that want a good return on metal with metal. So if you're in that position, you might want to investigate it. So we produce a lot for free every week, as you know, and also we do have a premium or a paid service. And on our paid service, we not only send you an email, but if you elect it, you can have a text as well. So in other words, if you live on your phone a lot and you want to know if we put out a new buy, sell, alert, update, whatever, it'll come to your phone. And again, that's an option. So a lot of people have both. They have their email and they also have a text message. So something that most of the competitors in our industry do not do, but we've done it. We've kind of led the way in a few of these things. I also want to announce that we're doing a Substack channel right now. We just got a few articles up there, and try to always keep it the Morgan Report, even though that's the free and the premium service, because it's branding. So there's no confusion. I could call it the Morgan Newsletter and distinguish it from the report, but it's just easier this way. Most people understand there's basically a portal that you go through that's protected for premium service, and then everything else is on the basic website. So I just put this one up recently, today, in fact. The Morgan Report approach works. Talking about what's going on right now. This is a 3-minute read. I'm not going to read it all to you, but what works is the big money and top tier companies. And why? Because they will move first. And we have reasons for that above what I'm reading now. Moreover, institutions will soon be rotating in, and they cannot buy juniors. Most fund managers are restricted to buying stocks over $5. So even though it's the best little mining company in the world and all that, blah, 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 the most, I said not all, cannot buy it. And so they will go to the majors. Plus, the amount of money these people move is so substantial, they can't buy a junior, move the stock. They wouldn't have any liquidity to sell on the other side. Yes, there are specialty funds. I've met many fund managers, especially through Europe, that specialize in the junior mining sector, and that sector will be on fire at some point, but it's too early to be there now. But if you're a premium member, I will be letting you know when I think the timing's best. So you read these bullet points: institutional investors in many sovereign funds, governments, retirement funds, life insurance, universities cannot follow a strategy that's guaranteeing their losses, which means if they're in the bond market, they're losing about 6% if they're getting a 2% yield and it's an 8.5% inflation. Quantitative easing, we all know 42% of all the US dollars created have been created in the last 30 months. The total debt and deficits over 160 trillion. Think about it. And of course, a negative yield, as I just said. So current investment in precious metals, certainly underloved, underfollowed, and rather disgusting at this point, I will admit, is now at just 0.5%, and the historical mean is about 2%. So if we go back to the historic mean, that would be a fourfold or a quadrupling in buying pressure. I believe it will get there and beyond. I do think once the trend gets intact, you'll see more than the norm come into the sector. But most people are followers, not leaders. They will wait for the trend, which is not a bad idea. It's just when the trend changes, you want to be aware that it changed, and you want to get in relatively early. Most people make sure the trend is intact and they get in late. Like take Cathie Wood's ARK Fund, for example. A lot of people, including someone in my family, think she's the greatest thing, highly touted on the mainstream financial media. great, and got in. Probably had about 3 months left. And now that fund's down, I think, 50%. So the other thing about the Substack is I've taken the comments off of the our YouTube channel. I just don't have time to go through and respond to everybody. I'd like to, but I have a paid service, and I guarantee a response to people that are on the premium service. Whereas I can't really do that on the free service, at least not without depriving myself of sleep. So on the Substack, the comments are available, so you can do that. Point out a couple more. There's only been whatever that is, 5-6 posts here already. My interview with the Load Chief Operations Officer, Nick. And this is one I wrote that is from recently. It goes into the Executive Review. It's a pretty interesting magazine. Silver is analog. And I want to read a little bit of this to you. About 2 decades ago, I was asked by a significant metals dealer in the United States to do a presentation on the merits of silver investing. The timing was perfect, and silver was at an all-time low adjusted for inflation. Moreover, a silver deficit was eating away 100 million ounces per year. What could be better? Buying low, and not only low, but the lowest price ever. And what you are buying is in such high demand that the above-ground stocks are being depleted rapidly. What I discovered was a couple of things. People do not buy bottoms. Investors were not purchasing silver. After all, it was coming out of a 20-year bear market and hovered around $5 US and stayed there, hardly moving. Of course, this spelled opportunity. Then there was a select group of investors that did buy silver. The most notable was billionaire Warren Buffett. Warren talks gold down, but he loves silver. Buffett purchased almost 130 million ounces. At the time, Bill Gates bought many shares of Pan American Silver. It's another story I won't go into. My conclusion is that the very smart money was buying silver. So most of the fund managers, pension managers, et cetera, weren't. Forbes magazine did a feature on Buffett's purchase. I've been through that many times. And so now is the time to look at silver again. And the reason is, on an inflation-adjusted basis, it's not as low as when Buffett bought, but it's very low relative to the amount of money printed. And the second thing is it's constantly growing industrial demand predicts there'll be potentially not enough silver mined and recycled to meet the demand just from the industrial side 10 years out. And that's a big projection, but it's there. Third, the market is manipulated, which gives pause to many investors. But the truth is all markets are manipulated. Yes, stocks, bonds, real estate, commodities, every one of them. The typical pushback is that real estate cannot be controlled, yet real estate depends on the mortgage rate, and central banks manipulate interest rates. To break it down into simple terms, you are affecting all markets if you can control or manipulate the price of money. So everything's based on interest rates in the credit-based or debt-based monetary system. So we're entering the end of significant inflation. It's going to accelerate, but the end of all great inflations end in tears. And I don't want you to be crying. I want you to be smiling or at least at peace. So I talked about what's going on with the CBDCs and how silver is analog to that, and on it goes. So certainly, and here's a subscription feature if you want to get on a premium service. And some pertinent news in the precious metals this week from International Business Times. Gold attempts to rebound as dollar stalls. And that's just basically what happened during the week. Gold has basically been up and down, and it's really going sideways to down presently. From Bloomberg, gold keeps its shine for investors as other precious metals fade. And that's pretty obvious from the title. Looks like it didn't give me the whole article, but basically gold is holding stronger than platinum, palladium, or silver. And this is true, and this is actually the way gold acts. I mean, I've been through one complete cycle, and the cycle from the start of 2000 till present. And gold usually moves, but not as dramatically as silver or the other two metals, actually. And of course, platinum is a conundrum because it's 15 times rarer than gold, but it really hasn't moved much above the $1,000 arena for a very, very long time. There may be an opportunity there, and I've actually indicated that there could be, but certainly it hasn't done much. But most metals, as I said, are going sideways currently. Moving over to some thoughts on silver. This is from PV Magazine, Photovoltaic Magazine, article by Max Hill, came out on the 7th of July, which is yesterday. Talks about the prominent analysts in China expect price of solar panels, raw materials to pass the yuan 44.70 per kiloton soon, and says sky-high prices will continue at least through September. Also want to point out that Matt Watson, that's an analyst, independent, that I've gotten to know, is quite good at what he does, and he is also forecasting you're going to see increased costs in photovoltaics. I won't read the whole article, but it's something you might want to look at later today. All right, last up, Mining MX article, recession fears drive metal prices to prospect of worst performance since 2008. Let me just say what I said earlier in this video update, that it's opportunity at a low. It's a very big low, and most people don't buy lows. I actually read you part of an article that I wrote for Executive Review, and I went through that with Buffett and Gates purchasing silver when no one else wanted to. And in the 2008 bottom, silver got cut by more than 50%, like 60%, but it went up over 500% from the bottom. Gold was cut off by about 30%, and it doubled from its bottom. So if that's any indication of what we're looking forward to over the next few years, like 2 or 3, I do believe that this is one heck of an opportunity. You just don't have to rush in right away. You can start buying now and accumulating. I would suggest thinking about accumulating from present day until probably September, October. There could be, and I think there will be, some type of stock market sell-off sometime in September or October this year. Finishing up, this article is pretty negative. Copper has fallen in the bear market from a record just 4 months ago, which is true. It goes on to say even if China recovers in the second half, it won't be able to single-handedly boost prices back to new highs. Well, we know that. Copper hit a 16-month low. Metals from aluminum to zinc have also plunged. And Bloomberg's industrial metals spot sub-index is down 26% this year, headed for the biggest drop since the end of 2008. Tin has more than halved from its March peak. Yep, everything's down. You're supposed to buy low. Again, I wouldn't rush right in saying, I know this is the low. It could go lower. But certainly when it's low, you can start to accumulate. This is David Morgan of themorganreport.com. I'll be back with you next week for a weekly perspective.